Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto's political wallet is now a regulatory weapon. Digital asset PACs have deployed $245 million to influence the 2026 midterm elections, with capital heavily flowing to Republican candidates. This strategic spending is reshaping the regulatory landscape, providing a tailwind for Bitcoin, which currently trades at $77,254. The market is pricing in a potential shift toward favorable legislation, turning political influence into tangible asset support. Meanwhile, the Canadian banking sector faces its annual stress test. 7 major institutions, including the Big Six, begin reporting earnings on May 25, 2026. Investors are scrutinizing credit quality amid rising consumer debt, with particular attention on GOZI's loan book performance. Simultaneously, BMO is leveraging its U.S. expansion strategy to offset domestic headwinds. Analysts are also watching for AI-driven productivity gains that could boost operating margins across the board. In related news, Mastercard has joined an elite club. The payments giant's shares have delivered superior returns for 2 decades since its IPO, placing it alongside Nvidia and Apple in the S&P 500's performance tier. This milestone underscores the enduring strength of consumer spending infrastructure, even as broader market sentiment fluctuates. However, caution is warranted in the technology sector. Big Tech's $2 trillion AI cloud backlog raises serious bubble concerns. Microsoft, Amazon, and Oracle rely on OpenAI and Anthropic for over half of this massive backlog. As free cash flow crashes under the weight of infrastructure spending, the parallel to the dot-com era is becoming impossible to ignore. The market must decide if this is a productive investment cycle or a speculative frenzy. On the macro front, India's Finance Minister Nirmala Sitharaman is defending the nation's economic resilience. Soaring oil import bills due to Middle East tensions are straining the current account, but she cites domestic strength as a buffer against external shocks. This geopolitical friction adds volatility to global energy markets, impacting inflation expectations worldwide. Looking ahead to today's release, the S&P/Case-Shiller home price year-over-year data at 1300 hours Universal Time Coordinated is critical. The forecast calls for a rise to 1.2%, up from the previous 0.9%. This reading will signal whether the U.S. housing market is stabilizing or cooling further. Additionally, the CB Consumer Confidence Index at 1400 hours Universal Time Coordinated will provide insight into household sentiment. The previous reading of 92.8 sets a high bar, any miss could dampen equity rallies. In Australia, inflation data arrives at 1:30 Universal Time Coordinated. The trimmed mean CPI is forecast to hold at 0.3% quarter-over-quarter, while the year-over-year rate is expected to rise to 5.1% from 4.6%. These figures will guide the RBA's next policy moves. That's your market briefing. Follow Rumour with AI for daily market intelligence.